After today's close, it seems that the bears are clearly indicating that they are not done with their job yet. Quite a disappointing close for the benchmark Nifty, slipping significantly from the intraday highs to slip back and post a close just a little above that 17,400 mark. Traders, very good evening. We are on the 24th of November 2021, Wednesday evening. Sorry, 10 minutes past 9 p.m. Yes, it's a little late tonight, but the bears are not led to bring in the selling pressure. This is the daily chart of the Nifty futures. By the way, tomorrow we are heading for expiry, so it's going to be very interesting tomorrow's trading session. So we had the 17,350, 450 zone marked and discussed for quite some time now. The index did come down to these levels and has shown a short-term bounce back, but this short-term bounce back was far too short-term in terms of its time span than what we could have expected. I have just changed down to the 75-minute time frame here, which shows that we had this bounce back, and this was the late afternoon's sell-off that we experienced in today's trade. But generally, when we get some bounce from expected supports, we expect that the index should show some strength and it should take the prices back to its previous lows, which can act as resistance. So the appropriate or a best case scenario or a good case scenario for this short-term bounce back would have been prices coming close to that 17,650 kind of zone. But no, it didn't even have the strength and the buying interest to even take out that 17,600 mark with conviction. And this sell-off, this slippage from its intraday highs was quite sharp and one way. So this is not good news. And coming back to the daily chart, the index is still above the recent lows, which is around 17,250, and a break below that of course opens up fresh downsides. When it comes to fresh downsides in terms of levels, I have a Fibonacci projection that I've drawn of this move extending on the downside. The first target was around 17,415. That's where this 350, 450 zone lies. The next important target from the Fib projection is around 17,100, a little below that. So we can use 17,100 zone. But what disappoints me is at this level, if you notice here at this Fibonacci projection level that I have a target, there is no significant price or volume. There's nothing in the price, no highs, no lows, no significant volumes either. So these kind of levels are questionable. So we'll see if the market at all comes there. The next level further down is, let's not talk about it. We don't want to scare the newcomers in the market for whom this is a first time a correction like this that they are experiencing. So let's not talk about that. That can come, may come. We'll see that step by step. We don't want to create any significant bias or expectations in terms of levels. We just take the market as it is, as it flows, and just be as flexible as possible. But the index has yet to, it's not yet broken the swing lows. Before I move on to some sectors and stocks, I would repeat the same thing that I've been doing for the last few days. Please stay low. There's no need to aggressively take positions in this kind of a market environment. Try to stay away from the long trades, especially short-term long trades. If you're a medium to long-term cash market investor, then yes, definitely do some good homework. Get a small list of good quality stocks which are available at a discounted price, and you can start nibbling at them at a staggered approach, in a staggered way. But if you're a short-term trader, then and if your bias is predominantly on the long side, please help yourself. Please don't trade, because the chances of getting whipsawed is very high. If you're net short, then I was suggesting to protect your open profits by trailing your stop losses. And if you have gone short late afternoon in today's trade, then be very careful, be extra attentive. If the index breaks the 17,250 mark, stay glued to the screen and observe how it behaves there. I don't know whether it will fall as an extension on the downside or whether it will bounce back or not, but I can sense based on my experience that generally when these kind of levels are retested and broken, the intraday volatility spikes up significantly. So be careful with your open trades. Interesting would be to check the sectors or the stocks which in this today afternoon's fall have already broken the previous low. Are there any such? IT is close to its recent swing low, but IT has been range bound. Auto, you can see this right there. So on the verge of breaking down its previous swing lows. FMCG, you remember we had drawn this line and we discussed that a break of this will decide. It has broken, consolidated and followed through the break of this, and this index is sloping further down for sure. Consumer durables also falls in the same category, but consumer durables, auto and IT are all in an uptrend and they're just weakening. FMCG is already in a downtrend, just like Nifty. So FMCG is far more weaker. So is pharma. Pharma, however, is a little away from its recent swing lows. Mid cap, little far away. Real estate, little far away. Metals also pretty decently far away, but very interesting levels here for fresh short. Finance is also far away. And when I say far away, I am comparing the current price vis-a-vis the recent swing low from where it has bounced back. PSU, private banks are still decently far away. So is Bank Nifty. Then we have finally small cap, public sector enterprises and media all doing fine. So which are the ones? Auto is there. FMCG is right there. Consumer durables is right there. And IT was there. And IT was there. So let's see. I think FMCG, consumer durables will continue to underperform in this market. In terms of our top stocks, before we go to the Nifty 200 and quickly scan the market, Maruti, Infosys, these stocks have pretty nicely broken below the recent swing lows that we saw a couple of days back. ITC has broken down. Hindustan Unilever has also shown a bit of weakness in today's trade. So overall doesn't look like a very pretty picture. Reliance is just there. Before I go to the iris and quickly scan, I would like to share something that markets at times surprises us. With this kind of a close and looking at the global markets as we record this, the Dow Jones S&P is down little less than 0.5%. The SGX is at 17,390, just 19-20 points negative. With this kind of a data information and today's close, a very obvious expectation, anticipation from tomorrow's market will be bearish, weakish, and an expectation that the recent lows will be broken. When too much of an expectation gets built up, the market really enjoys to prove them wrong. So this is my personal opinion, and I'll always request and suggest that always when we create a view, a trade, always back of your mind make sure that what can go wrong, what can be the opposite side, above which level, below which level my entire hypothesis goes for a toss. So above which level does this prospective bearishness goes for a toss? Above today's high, that is 17,605. If in case these recent lows are not broken or just touched and bounces back, and within the next 2-3 days after the expiry, with the next fresh December expiry, if we see the index taking out the 605 level, then we have a clear-cut low in place and we'll have significant upsides from there on. Till that happens, I don't think so. It's a smart thing to go for aggressive long trades. Stay put, stay quiet, and just observe the market. Nifty 200, the InstaView scanners. Let's quickly do a scan and check if anything stands out in today's results. VBL inside bar, not bad, uptrend consolidating, not bad, above today's high. Biocon is a fresh uptrend reversal story. I wouldn't trade this stock. Jubilant Food is weak and it has created. Coforge is definitely a good relative strength is very strong. It's a good trending counter, but recently it has moved into a very, very volatile range. Then we have Dr. Reddy at supports, but in a weak trend, not so good, and so is Tata Steel. So none of these inside bars stand out. VBL looks still, I think, better off. It's giving us a wedge kind of a correction down here. ISEC amongst the bullish bearish Harami patterns, decently range bound. Astral also. Britannia can't be a bearish Harami pattern, cannot be a bearish Harami pattern, cannot be a bearish Harami pattern. These kind of patterns should shape up on the top, not at the bottom. Then we have Sun Pharma, cannot be a bearish, and finally Imami. And no, let's not go for any of these bullish or bearish Harami pattern. Now I'm quickly scanning for looking at the Nifty 200, which are the stocks where we did see some high delivery percentage. Now the list is getting longer, which is a good thing. Colgate Palmolive, interesting levels. Dabur, Endurance, Gland, HDFC, AMC, okay, that's good. HDFC Bank, look at the volumes that we saw in today's trade. SBI Card, okay. Tata Com, I think we have discussed, looks very interesting. Then we have TCS and Trent. Amongst these, the ones that really looks good quality, gone through a correction and now picking up delivery percentage, definitely HDFC, AMC, HDFC Bank. Love the level of volumes that we noticed in today's trade, very, very encouraging. SBI Card also not at bad levels, just below the psychological 1000 mark. And Tata Com, I think these four stocks, and of course TCS, stands out really well amongst the high delivery percentage. Breakouts wouldn't be a smart thing to do in this kind of market environment where bounce backs are not able to sustain itself. So breakouts are really good, really useful when you get a one-way bullish market. That is where it works better. None of these charts actually looks that promising as I click through them. ABFRL looks interesting, but all depends on tomorrow's market. Oracle long and Oracle short are intraday trading setups. Coromandel looks interesting for Oracle long above today's high. You can note that. Astral, no. Biocon, no. HDFC, AMC, Nov’21, definitely no. And Castrol India. Castrol India has got an Oracle long and range contraction for 2 days. It's got a bullish divergence also down here. So Castrol and Coromandel can be considered as Oracle long, that is intraday long. And intraday short perspective, we need to see some stocks which are extended and has created an inside bar when the range has been contracting. None of them, as I click through them, looks that promising. So I would suggest go with those stocks which will break below the recent swing lows as your prospective short trades maybe. But coming back and wrapping up the daily analysis on the Nifty, interesting time with the expiry tomorrow. We'll keep a close look at 17,250. Then we have further levels drawn on the downside. In case we have a surprise move on the upside, in case, who knows, then yes, above today's high. If you are bearish, if you have short positions above today's high, please square them off. Let's see how the market reacts. As I said yesterday, bias is and should be on the downside because it always makes sense to stay with the underlying short-term trend, which is down. It'll be an interesting analysis tomorrow evening, and I'll try and post it as early as possible. For now, good night, take care of yourselves, trade well, trade wise.